Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we have special guest Travis Dragan with us. He's a chartered financial analyst and a portfolio manager for Lineweaver Wealth Advisors. He's going to talk to us about the power of dividends in your portfolio. So history wasn't one of my favorite subjects in school, but since none of us have a crystal ball, it's one of the best places to start.
Right, and historically speaking, if we look at the data over the past 90 years, dividends represented over 40% of the S&P 500 index's total return, according to a 2021 publication by Hartford Funds. And over the past 50 years, the dividend-paying stock index produced returns in line with the S&P 500 index, but with a lower degree of volatility or realized risk.
And when you compare dividend stocks versus growth stocks, dividends have really been out of favor for quite a while.
Right.
However, if you can get some good dividend producing stocks out there, especially like in this low interest rate environment that we've had for the last couple of years, it can really benefit your portfolio.
Right, so in the past, investors who were focused on producing current income and investment portfolios could rely on the bond market to produce higher yields. However, looking forward in this low interest rate environment, that investment objective appears more difficult to achieve solely through bond allocations.
And there's a lot of ways to get income in your portfolio, but today we're just going to talk about dividends. Because you have the 10-year treasury that's yielding just a little over 1%, but when it comes to these stocks, you really want to maybe concentrate on those good quality ones that are paying maybe a 2, 3, 4% dividend.
Right, and there can be positive tax implications as well. When we're talking treasury bonds or corporate bonds, income from those bonds is federally taxed at an investor's full ordinary income tax rate, whereas dividend income may be only taxed at a typically lower qualified tax rate, so there may be positive tax implications for investors there as well.
And we really look at these dividend producing stocks. I mean, there's a ton of them out there,
right,
but you got to be really careful and do your homework because it can be challenging finding good quality dividend stocks.
That's right, and the future prospects of a lot of dividend stocks can differ and often differ meaningfully. Our investment process tends to focus on two main characteristics, the first being companies with low debt outstanding, and the second being a low or reasonable dividend payout ratio. We believe those two characteristics are differentiators and can often lead to companies being able to sustain current dividend payments, but also grow future dividend payments.
And as dividend investors, the last thing you want to experience is a cut or elimination of a dividend.
Right, and dividend cutters and eliminators underperform the broad dividend index by over 3% on a total return basis per year.
Dividends are an important consideration for any portfolio and can help provide income for those in or near retirement. If you're looking for ways to increase the income in your portfolio and help combat the rising prices due to inflation, give us a call. Travis and I are here to help. Stay tuned for Chris Wallace.